Welcome to Gaming Fin, your channel for everything related to the gaming industry and the financial markets. And my friends, today we have to talk about Embracer. So Embracer is the stock of today, and not in a positive sense, my friends. So in a very, very negative sense. So Embracer is down today, only today, 13.43%. And it has been down the whole day. It has been down the whole day, even more so. At one point we were down at 42.33 Swedish crowns. So, and then the stock came a little bit back. And now probably a lot of you guys, you are asking yourself, so hey, Mr. Orange, is this the moment that I actually buy this stock? So first of all, I'm not a financial advisor. I'm a YouTuber, a retail investor myself. So please don't buy any stocks I'm talking about in my videos. Information, entertainment purposes only. And yes, I'm invested in Embracer, and I'm also down, my friend. So I have, I would say, Embracer has a little bit a bigger position. It's a 0.48% position in my overall stock market portfolio, or my overall portfolio, and I'm now down, guys, 41%, almost 41%, and this is incredible. So this is incredible because my average in Embracer is now 72. Here we go, 72 Swedish crowns, and yeah, I bought it at one point when I thought like, okay, there's a good chance the stock comes back, but you see here on my chart, so we broke through the supporting trend line, I would say, in October 22, and since then, so I actually also thought, oh no, we're not falling down. The Fibonacci retracement at round about 37, 38 crowns. So we are now here around the 43 crowns. So, but I could very much imagine that we fall a little bit lower. So, and why is it that? Why is it so that I imagine this? So what is actually the reason? So also now we're going to ask, what is the reason that Embracer is falling so much, guys? So, well, the reason is probably this news from here on Reuters, on TradingView. We see set on Monday, previously communicate working on partnership and licensing deals with several industry partners that are considered jointly transformative. And a notable range of outcomes from these deals has previously been expected to be completed during the financial year of 2022 and 2023. So now they changed it. Now expects that these transformative, amazing deals, partnerships are not likely to be completed until the fourth quarter of this fiscal year. So, but instead, first quarter of the fiscal year 23 and 24. So next year. So, but is this the real reason? I think, guys, the real reason is this Financial Times article. So if you click on it, I put you a link in the description of this video. So if you click on it, you're going to have access. So normally you have to pay for Financial Times. So therefore, I'm not discussing this now here in detail. But guys, someone... and this is hurting me. This is hurting me personally as someone who lost money in Wirecard. So I was invested in Wirecard, and as someone who lost money in Wirecard, so Dan McCrum, guys, Dan McCrum and Anna Cross, but especially Dan McCrum, and he was the leading Financial Times journalist back in the days which led to the downfall of Wirecard. So why I'm saying this? So because the question is here a little bit, is the accounting it's not that like the Wirecard situation where then some billions were going missing. So this is definitely not the case. So I have to be clear here. So therefore I'm also not so mega negative now. But when I read this, I got a little shocked this morning. So when I read this, that Dan McCrum wrote an article in the Financial Times, and I read something about Battles. So Embracer Gaming roll up Battles claims of aggressive accounting. So if this is something I read by Dan McCrum, then I'm listening, then I'm reading this article. So I read this article in detail, and guys, I absolutely recommend you to check out this article. So I'm very sorry that I cannot cover this obviously here, so it's a paid article, so I can't do this. But here, best publicity, dear Financial Times, of course, for this article. So please, everyone, click on it. and it's very high level of journalism, so I absolutely support the Financial Times and Dan McCrum. So I totally changed actually also my opinion. So, and back in the days, so in the Wirecard, when the scandal happened, so I wrote down some new investment rules because I lost some substantial money. So first of all, my rule was not to put all eggs in one basket. So this was my first rule, and then I had, of course, so meaning diversify, so don't invest too much in one stock. And then also when a stock falls based on some accounting issues, then also not go now much full in. So then look at it and observe it and see how the story develops. So I'm not saying I'm read the article, guys. So it's not a Wirecard situation here, in my opinion. But what they're criticizing overall is that the way how several how when you acquire a new gaming studio, how this is then accounted in your books. So, and that's very interesting. I also have to say I'm not a financial advisor, as I said already, and I'm not a accountant. So therefore it's very difficult, guys. It's very difficult for me to understand what's really the real problem here. So on the one hand, I hope that Lars Wingefors, I think that's his name, so the CEO of Europe's biggest gaming company now. Yeah, that's it. It's Europe's biggest gaming company. I hope everything is fine, and I hope to read some statements by Embracer about this article, because not like and just don't like article statements like, oh yeah, everything's fine. I want a bit more detail. So, but I hope everything is okay. So because there were some critics, and those critics have to be addressed. So, and I'm way too long investing myself that I'm just saying no. So yeah, I like Embracer. I'm invested in Embracer, and therefore I'm not accepting any critics. So if someone writes something like Dan McCrum, if he writes an article about this, so he has his reason. So he definitely is looking a little bit more critical at the accounting and the way how Embracer is doing the accounting. And he also has access to excellent hedge fund managers and other people. So very important. So keep this now in in the back of your head if you consider now investing in Embracer Group. This article, read this article and then make up your own mind, of course, if you consider investing now, because now you think like, yeah, Embracer fell 13%, guys, so I have to get all in, so I have to go all in. So guys, if you do this, so it's a tricky game. So I could actually really imagine that we go down to the Fibonacci retracement of the 37.8 Swedish crown. Absolutely possible. So therefore I'm holding my feet still. I'm doing nothing now. I'm not putting more money in this company. So I really want to have more clarity, because I don't want to lose my cash that I have in this money. So I really have to say this. Overall, it's a gaming company. Now comes the positive part, because now I was a bit grim, a bit dark in my assessment. Now the positive part is that, I mean, it's still a company. I know those games. I know the games they make. I know they make those games for Steam, for the Epic Games Store, for consoles. So I know those games can make money. Some of the back catalog is a cash machine. They have Goat Simulator 3, and they have a lot of now games on the Epic Games Store. I know I was also very critical, guys. So when I was making a video about message to all the investors, so keep this in mind, or message also to big investors, where I said, I hope I didn't influence this, the big institutional investors. Now, of course, no one watches my videos anyway. So I was saying, so making games only for Epic Games Store PC and Epic Games Store exclusive is the wrong way to go. And I'm still totally signing this statement that I made some weeks ago. So I'm still totally still there. So they have to change this, and they have to go multi PC launcher platform. They definitely have to do this. So, but good games. So I mean, all those games exist. So the money exists, and the problem is some gaming studios were a little bit expensive when they bought them. So yes, Embracer did the mistake that they were just buying too many expensive companies. So here we are again. We can look at the presentation from the October-December report here, guys. So you see this. So I'm not an accountant. I have really problems in reading their books, so that's for me definitely an issue. But I see they have a back catalog that works. I see they have nice gaming studios. So I see also that some of their new releases are not that interesting, so that I have to improve this. I see also that they have mobile games, tabletop games, so all of this is very good. So if I look from a gamer's perspective, and this is for me also important, from a gamer's perspective, I would say doesn't look so bad. It doesn't look so bad from a gamer's perspective. And now if PE ratio 2020, 59 on Google Finance, then on Yahoo Finance we have a PE earnings PE ratio not available. So that's always the question. So what is now the PE ratio? So also for this, please check out a Financial Times article there. It also gives us some more explanation if they're actually making a profit or if they're not making a profit. So that's the big question, guys. But so overall, I'm bullish on the gaming industry. So I'm invested in a lot of gaming companies. You find them in the description of this video. And this means I'm staying in Embracer. So I think they will be as one of the big boys now in Europe of the big gaming companies. I'm sure they just continue. They will deliver their AA, maybe even AAA games in the future. They have some games in the pipeline. And I hope they're also consolidating a bit more and not going to acquire for even more studios. So that's I think is not the right way to go. But it's true, the stock doesn't look so good, and I expect it to fall even further. And therefore, I'm just doing nothing right now. So guys, doing nothing. So that's very important. So that's if I have a recommendation for you guys, sometimes observe, research, analyze, verify, and then maybe do nothing afterwards. So it's all possible. So, but this chart is so ugly. I mean, we have to agree on this. It's a terrible, ugly chart, my friends. A terrible, ugly chart. So, but we're coming a long way. We're coming a long way, and sometimes stocks have to go down. So 2016. Let's see. To 2023. So 800% even since 2016. So that's not bad. So let's hope everything goes well. I have a little bit hopium here, so I'm a bit insecure now. I have to admit this. The Financial Times article, Dan McCrum, my friend, you really did. You didn't help me to look more clear now after this drop of 13%. So it's definitely was making me more insecure. And now this is a wait and see story now. So it's a wait and see story. So at the moment, most negative, and probably it's going to be even more negative in the future. So that's my position now on the big drop today, on the Financial Times article, on the news. So I promised you guys, so I just came home from a party, but I promised you guys, so therefore my voice is a bit more weak. I promised you that I continue with this finance gaming channel. So I really enjoy this channel. I really enjoy what I'm doing here. So, and I'm definitely going to continue with this. So, and hope to grow this community some more. If you're watching still now, comment, like, and subscribe. So please subscribe and even like it, and even comment again. Comment what you think about the Financial Times article. Not being a fanboy. That's always the most important point. So don't be in love too much with the stocks. For me, it's just one of my 100 stocks. So I have a lot of stocks, just one stock. So, but I'm not falling in love with any company ever again. So that's definitely the wrong way. So thank you very much, guys. See you next time. Bye bye.